Welcome, everybody. So today we are pre-recording. I'm pre-recording here on Friday morning, September 5th. Tavi recorded last night, and Quentin will be recording right after me. So everything is pretty fresh, including we have the jobs data that just came out this morning, and another weak jobs report. The U.S. economy added only 22,000 jobs in August, much weaker than expected. Unemployment rate is still high and rising at 4.3%. Uh, not super high, but starting to rise. Highest since October 2021, and the June jobs growth was actually revised to negative. So we had job losses actually in June. July was revised up just slightly, but you can see in this chart here from Heather Long that the jobs trend has just been weakening consistently, and so this is giving the Fed uh, the ammo to be able to cut rates, just exactly what Trump and Bessent want to see. Let's go on to the next. In fact, the yield curve, the Fed funds curve, is now pricing in 100 basis points of rate cuts uh, into by March of 2026. Uh, you know, Basically 100% probability of a rate cut later this month now, based upon this jobs data by the Fed. And but what's the problem here? At least I noticed a few minutes ago, while the short end of the curve is coming down, two-year yields are down significantly. The long end is actually going up. 30-year yields were up. I think 10-year yields were up as well when I peeked at them just about 10 minutes ago. So what's the problem here? We still have the stagflationary type data that's coming out, and the Fed is going to be cutting rates into an inflationary environment. This is the most bullish type of a setup that it could possibly be for precious metals, and for precious metals mining stocks. And it is and that's why we are heavily focused with the debt, the deficits, and the administration's plan to ramp up the economy through onshoring, reindustrialization, uh, et cetera. We have an inflationary environment. Of course, the goal of the administration, while it's not explicitly stated, it's pretty clear that they want to weaken the dollar as a means to improve the trade deficit situation, and to essentially grow the economy on a nominal basis, uh, but largely through inflation. So the game plan is we are going to try to inflate our way out of our debt problem, and this is why we're heavily focused on precious metals and on precious metals mining stocks. And so let's go on to the next. Just one other nuance from the jobs report this morning. Uh, Data from this came from Zero Hedge, but the underlying data comes from the BLS. The full time jobs um, actually we actually lost 357,000 full time jobs in the month of August, and it was part time jobs that grew. So it's a really weak underlying type of a jobs report that we just got today, further increasing the likelihood of those rate cuts, like 100% probability later this month, and continuing, in the months ahead. So let's go down. Um, Crescat, we still have 5 of the top 8 performing hedge funds. This is through the July data, according to the Preqin database, and there's over 2,500 hedge funds now that have reported their numbers through July, and Crescat has 5 of the top performing hedge funds year to date. And and we put up positive numbers in August as well, which I'll show in a minute. But so it's likely that we're going to continue to have some strong showings in this Preqin data for our year-to-date performance. Now look, everyone's going to say, well, Crescat, you had a couple of years there where you underperformed the markets and you were actually down in some of your funds. And it's true. We have stuck to our guns based upon our conviction regarding our positioning on the long side, especially with our activist precious metals portfolio, which is an entire fund with the precious metals fund and the institutional commodity fund, but it's also the largest long only theme in our global macro and long short strategies. And that theme underperformed for us. It is now showing why we stuck to our guns. And I think we are still very early in a long-term secular bull market for precious metals mining stocks. And we're not just about buying gold or buying silver. We're about buying companies that have the most upside leverage to the price of gold and silver. And we believe that is predominantly in the small cap exploration segment, as well as on the development side of things. Yes, we like the large cap mining producers as well. But the real upside, we think, comes from this activist exploration strategy that we have, where we can create some of the biggest new discoveries around the world by getting money to the companies with the best management teams and geologists and technical teams to be able to do the drilling to create the new big high-grade discoveries of gold, silver, copper that the world needs. There's been an underinvestment in mining over the last 10 to 15 years. And so there's a huge supply. There's been an underinvestment in drilling and explorations. And so there's this big supply-demand mismatch. And that's why we've been getting the money to these companies to do the drilling for the last 6 years. Now we have some of the biggest and best new discoveries and significant activist stakes in a portfolio of close to 80 different small cap high growth exploration focused stories and development stories. And we think there is a lot more upside still to come. No guarantees, but I think it's very early still in the cycle. Let's go on to the next. We just have recently celebrated our 5-year track record back at the end of July. We continue to have another positive month. The benchmarks had a positive month as well that last month, and so the entire underlying backdrop for precious metals mining stocks is starting to outperform the rest of the market. I think Tavi coming up will have some slides on that to really show how the mining industry, the mining stocks are outperforming just about in a big way, every sector year to date in the stock market. But our fund, 30.5% net annualized returns now since inception. This is 5 years and 1 month through August, and knocking the socks off of the benchmarks, as you can see here. Let's go on to my last slide. So we look at Crescat and all of our investment strategies. We basically have 5 hedge fund strategies for accredited investors and for qualified purchasers. Our institutional funds are for qualified purchasers only. We have 2 SMA strategies too. Our large cap SMA, which has a almost 27-year track record now. That's the first strategy that I launched as a portfolio manager back in 1999, and that strategy is outperforming the S&P 500 index. And then we've got our precious metals SMA strategy as well. That's a strategy that we are going to be trying to recraft a little bit to be a little more focused on larger cap and more liquid names, so that it doesn't really compete directly with our our precious metals hedge fund. The issue with the small cap names in our precious metals hedge funds is that we predominantly participate in private placements, pipe deals in public stocks, where we can get money to the companies to do the drilling. We can come in at a discount to the public market price and structure a deal with these companies where our fund gets warrants to get further upside if we're successful with our drilling. And the problem with the precious metals SMA when we're investing in a lot of those same stocks is that the investors can't participate in the private placements and the warrants. It's something that we can do really only exclusively in the funds for practical reasons. And so anyway, that's what differentiates the precious metals SMA from the funds is the SMA can't get the private placements. And so you're going to be, but we're going to be recrafting that fund a little bit to focus more on some of the larger, more liquid names, and not compete so directly with the precious metals fund. I encourage everyone, if you're interested, to please go to our website. We have all this information. We show both in the funds. We show both the with the entire fund performance, including the San Cristobal side pocket, as well as the X side pocket performance. So 1 year ago, we put a private investment that we own inside the funds into a side pocket, and Deloitte, our auditor, really insisted that we do this. But San Cristobal is one of the most exciting stories that we have in our portfolios, and we own one of the largest silver producing mines in the world, with a new silver discovery 40 kilometers away that is potentially one of the largest silver discoveries in the last several hundred years. We think there's a lot of great things going on with the drilling there and a lot of upside still to come. And we do have a plan to ultimately get that investment out of the side pocket. But we because of the very bullish silver environment and comparable prices and all the cash flow that San Cristobal has been generating, we're forced to do fair market valuation. And even though we're valuing this company at less than 4 times free cash flow, which we think is conservative but fair, we did have to do a markup in San Cristobal last month, a write-up, and so there was like a 10%, 9.4% increase in the price of San Cristobal last month inside our funds as well. Anyway, so we have some exciting things in store for today. One thing I'm really excited about is that Tectonic, one of my favorite positions among our exploration focused companies, they finally got their news out on the progress of their drilling up at their flat project in Alaska, and they have a great news release. And if you go to some of the further attachments in that news release, you'll see a whole slide presentation with lots of core visuals and geologic descriptions of what they've hit in their phase 1 of their drill program. I really hope Quentin's going to be going a little bit more into depth on that and showing some of those slides here later today. But I encourage everyone to go to Tectonic's website, look at that news release that came out on September 2nd, and click into the PowerPoint presentation where they go through a lot. There's many visuals. I mean, I think it's incredible looking core. I'm really excited about what they've been hitting at both at Alpha Bowl and in this new section that didn't have a name to date, so they call it No Man's Land inside their Chicken Mountain section of I mean, really cool looking visuals and exciting new vein densities, and then a Golden Apex as well, which is where they had some historic drill holes that hit very high grade gold, and they're coming up with core that looks very similar to that. Now the assays are all still pending, so this is all visuals, but you can go you can go look at the core. You can read the geologic descriptions. I encourage everyone to go check out Tectonic.